As of now, when I'm making this video, the inflation rate in Germany is around 10%. What that means is that the 1000 euros you have in your bank account will get you only 900 euros worth of products next year. And the only way to escape inflation and save your money is to invest in the stock market. But then when you search on Google for the best investment options in Germany, you're bombarded with dozens of them. And it could be a bit tricky to know where to put our money with the best possible returns. So in this video, I'll list down the main investment options available in Germany, irrespective of whether you are investing for a short-term vacation or a long-term retirement. And to make it easy for you, I will start with the less risky, less profitable options and end with the riskier but more profitable options. If you are new here, my name is Srijit, and in this channel, we talk about how to make, keep and grow our money and achieve financial independence. Keeping our money in the bank is the safest bet and the one which takes least effort to maintain. You open an account with the bank and put money in it and let it grow based on the interest rate provided by the bank. But there is a catch. It offers one of the lowest interest rate as low as 0.1% and hence the least returns for your money. But still, it remains one of the most popular investment options in Germany because of something called deposit protection. Your money is insured with 100,000 euros per person and account by law. It is as safe as it can get. Also, the money is readily available whenever you want it. Now, there are two main types of savings accounts in Germany. An instant access savings account, or also called the Tagesgeldkonto, that lets you earn more interest on your deposit than the regular savings account. Still, the rates are very low to make a considerable return. At the moment, less than 0.5%. But this is still an excellent way to separate some money from a regular account where you manage all your daily expenses. The second one, a fixed deposit, lets you put your money in an account for a fixed period at a higher but fixed interest rate. You can get around a 1 to 2% interest rate at most banks if you invest for a few years. And the longer the term, the better the interest rate. If you're planning to buy a home or a real estate property in the future, one option you could consider is a home loan savings contract or a Bausparvertrag. This is kind of a special savings contract that combines a savings plan with a home loan. The concept is simple and involves two phases, the savings phase and the allocation phase. During the savings phase, you put money into an account for a certain agreed period and interest rate. And at the end of the period, you can receive a house loan at a favorable interest rate that was agreed upon at the start of the contract along with the money you already saved. This is the allocation phase. The advantage here is that you are protected against fluctuations in the market and a probable increase in the interest rates. Still, the low interest rates on home loans nowadays make this option less attractive. Even if you are planning to buy a home in the future, you'd be better off putting your money in other places. Germany has a mandatory pension scheme in which everyone employed has to contribute to a public retirement insurance. The amount is deducted from your salary and provides you with a pension of around 70% of your salary when you retire. But the catch here is that the money is deposited into a shared pool and not into a specific account in your name. And the policies are always changing and there is no guarantee that you will receive this amount by the time you retire. Private pension plans helps you to escape this uncertainty associated with government schemes. They allow you to put a certain amount of money every month into a personalized savings plan. You can then get your money back as a pension starting from the age of 62. But remember that this is an option only worth considering if you intend to stay in Germany for the long term. The important thing to be aware of is that there are two types of life insurance, Kapitallebensversicherung and Risikolebensversicherung. But the core concept is simple for both. If the policy owner dies during the term of the policy, then the family gets the insured amount compensating for the lack of income. But the main difference between these two is that the Risikolebensversicherung focuses mainly on the protection of survivors and the money is only paid back if the insurer dies during his term. This is particularly suitable if you have children or if home loans are to be covered. Kapitallebensversicherung or capital life insurance combines the survivor protection with a retirement plan and is a bit more expensive than the Risikolebensversicherung. Money will be paid back either if the policy owner dies during the term or when the insured period expires. Real estate prices in Germany have increased rapidly in the recent years. The prices of existing properties are at record levels. Simply put, real estate is a great investment opportunity if you can afford it. The interest rate for home loans couldn't be better, with some banks offering as low as 1%, although recently the rates have gone a bit high. Bonds are considered a more secure investment option where states or companies borrow money in exchange of securities. Ideally, you act as a bank providing a loan and receiving an interest in return. The risk here is that the company or the state could go bankrupt. Since this is a less probable scenario, the risk associated with bonds are also very less. But then the interest rates and final returns are also less attractive. You can expect to get around 5% returns on government bonds. The interest rates are fixed in advance and is usually paid out annually, and you get your money back at the end of the term. Stock market investment will continue to be the most popular investment option because of the high returns in the long term. If you want to make considerable profits and let the money work for you, then you cannot avoid the option of investing in the stock market. Stocks are stakes in a particular company that let you own a part of it. Here you're ideally betting on the future prospect of the company, that it will grow and make profits and you can earn a part of it. Other than stocks of individual companies, you also have the option to invest in funds. A fund is a collective investment where the money is pooled from different investors and then collectively invested in the stock market. You can think of it as a company that collects money from different investors and then buys shares with it. Another popular option when it comes to funds is an exchange traded fund or an ETF. ETF is a fund that follows a stock market index as a whole instead of one particular company or a stock. Cryptocurrencies are digital currency on the internet, which is based on encryption technologies such as blockchain and digital signatures. The investment scheme is very simple. You buy crypto through a trading platform and sell it when the value increases. In Germany, crypto is treated as a private asset and comes with an income tax if your total profits exceed €600 per year. But the important thing to note here is that these are very early stages for the cryptocurrencies and the market is highly volatile. So only consider investing the money in crypto that you are ready to lose. Every option that I mentioned above has its own benefits and drawbacks. It is for you to decide which is the best investment option for you based on your financial situation and your personal goals. If you want to grow your money and protect it from inflation, you can watch this video where I explain how to invest your money in the stock market with scalable capital. Until I see you with another video, smash the subscribe button if you haven't already. Take care and have a wonderful rest of the day.